Well, we're back with you to take a look at our ag commodity trade on a Monday, and we'll take a look at the grain markets first in this particular segment. But we want to rely on the expertise of a good old friend here that has come into the studio, Mr. Chris Swift of Swift Trading Incorporated. How are you?
I'm doing great, Marlin. How are you this morning?
All right, good to have you back with us.
Good.
Thanks for coming in as we take a look at the corn market first.
Okay.
We were talking about this a little bit ago. When you have bullish news like this, who needs bears in the market?
That's right? Exactly right.
So we had an export sale announced overnight by USDA. 1.645 million tons of corn sold. Just a huge number of corn. And then we have March corn. Here it is, down 1 3/4 at 383 3/4. What is the problem here? Why can corn not rally on a sale like that?
Well, I think they would like to see even more from it. And when you get large sales like that, you got to think how much more do they really need immediately right after that. But I think there's just a lot of corn still out there. But the demand is great for it. Even with the Mexican peso having been down, the last probably 3 months maybe, even still coming in and being able to make those kind of purchases is very supportive.
Do you think some of this is related to the fact that we have the big crop report, the supply and demand report coming up tomorrow, and traders are just
some
a little
of it could. Sure, absolutely. I don't think this report can show a great deal of differences as far as anything additionally harvested or yields on there. They may have some small yield changes there per acre, but other than that, this report, most of the crop is already harvested, so we've got a pretty good idea of what's going to be in the bins.
Let's take a look at soybeans, and on the soybean trade right now, on the big board here, we currently have the January down 2 3/4. We're at 914, and you have the March contract down 2 1/2 at 926 1/2. So no enthusiasm there either ahead of the report tomorrow. By the way, that report comes out at noon Eastern time, 11 o'clock Central. And as we move on to the wheat trade, now on the wheat in Chicago, we have March down 5 1/4 at 526. Still only 2 ticks from the low of the day once again. Now in the Kansas City market, let's take a look at hard red winter wheat. Remember, we had that big sale late last week. Mm-hmm. And it's not doing any good here either. We have the March contract down 3 1/4 now at 508 3/4. And if you look at the Minneapolis wheat on the March contract, it is down 4 1/2 cents at 577. My goodness, where is the bottom in this wheat market here, Chris?
I'm not real sure. I know that John and I talked last week a little bit about the bean market, and because of the Chinese relationships with the tariffs and the tariffs being put on hold, it would have a good impact on that. And of course, we saw by Monday morning it had already dissipated to every bit of it, but by week's end, we did close higher on the week for beans. And so wheat had a big day up on the one that it last Friday, with the sale on it. So I think maybe, good news is already out, so we just start trading back the big supplies that we have on hand.
I was I kind of cut my teeth on market reporting as a contrarian, if you will, and I was reading somewhere this morning that open interest in wheat is like the lowest that it's been since October over a year ago. Does that mean that the market is getting primed, that everybody is just out of it, and if things do catch and move higher, there will be a lot of activity coming back in again? Well,
anytime you've got low volume, you tend to get high volatility, so it is very possible. And even Friday's move up 15, 16 cents, that's a fairly big move for really not that much more that happens. So yeah, it can make a big impact when you got low volume of traders out there. It can produce some pretty high volatility.
Interesting stuff. All right, well, we'll come back here in just a little bit, and we will take a look at what's going on in the livestock trade as it stands right now. And we come back and talk more with Chris Swift. Well, we're talking right now with Chris Swift of Swift Trading Incorporated in Nashville, Tennessee. He joins us in studio right now. Okay, want to talk a little about the cattle and hog markets and the cattle market. It's kind of like that deal with the corn, isn't it, where we had the big export sale, and on the cattle side, we had cash cattle prices that rose Friday, right?
Yes,
they were up $1 or $2 from a week ago,
sure were.
And then they opened weaker this morning.
Yes, a little bit soft.
Okay, let's go take a look, and I want to get your thoughts on this. So on the live cattle, yep, we have February down $0.50 now at 120.103. Now December's technically in delivery now, right?
That is correct. Yeah, today's first notice day.
Okay, now April down 42 cents at 123.20 per hundredweight. Now if we roll over and take a look at the feeder cattle side, here you have January up 50 cents Now, what's that about? 144.88 is now the last trade. March up 57 at 142.45. Why are the feeders gaining on the live cattle today? There's about $1 difference in spread.
I think because the disparity has been so bad, this is a coming back together of those spreads between. We have seen fat cattle up at the very near end of the contract highs for the last 2 weeks. Seen fat feeder cattle holding the bottom end of it for the last 2 weeks. So I think that's all you're seeing is a little bit coming back. I keep hearing more and more that there's a lot larger cow kill that we have come into for the month of December. I believe that helps as far as our expansion phase goes to curtail that quite a bit. And I think we're just got a little bit more elevated numbers that we're going to slaughter through. I think last week's slaughter was 43,000. So big slaughter for the week, and great demand out there. So.
Okay, we had the, President Trump, President Xi meeting. It's been a little over a week ago now. And initially in that meeting, there was a lot of optimism. Soybeans rallied hard. We had the cotton market surging ahead, almost lit up. We had the lean hog trade surging ahead over $2 higher.
Right.
Let's take a look at where they are now on the lean hogs. Okay, here we go with a look at the big board. And on the lean hog futures, well, December 48 higher. Now, this December contract is cash settled, so they don't have deliveries to worry about. 54.73. The active February contract, though, down 92 cents again at 66.95. You got there to June in the summer months. It's still over $82 at 82.95, but it's down $1.10 from where it had been earlier. That's still a giant disparity between the nearbys and those summer months there.
It is, and that basis spread is not abnormal this time of the year. The June contract, summer months can hold fairly hefty premiums to the index, and we did kind of notice that the index had been dropping less every day over the last several weeks, and 2 days last week it actually traded a few ticks higher, back down again at over $1 before the week was over with. But I think we're starting to see that carcass value find a bottom down in here, and if it finds a bottom, then the futures premiums that they're carrying February now won't be too awful burdensome.
If there would be Chinese business and they would buy some pork, would that not help the cattle market too?
It would help. Probably Mexico would, since it's our biggest pork importer there, and we've seen them use a lot of corn and buying a lot of corn, so maybe they need a little pork to go with that. And so I think that's where, if I were going to look for something to transpire before the end of the year, I'd look more for a Mexican pork purchase than I would Chinese.
Oh, interesting. All right. Well, thanks for coming in.
Sure.
Appreciate it.
Absolutely.
Chris Swift of Swift Trading Incorporated in Nashville.